This is Mark Espy once again with MarketTamer.com, OptionsRevolution.com, and it is Friday afternoon, the 10th of September, and it's after market close, and we're looking at the SPX, which is the large cap Standard & Poor's 500 index, and must remind everybody that everything we speak of here is for educational purposes only, and never to be construed as a recommendation to buy or sell anything. Please do your own due diligence. Okay, a lot of lines going on here. Let me explain what's going on. Drew some trend lines to just indicate where I feel support and resistance is. I think there's outstanding support at 1040 to 1044. You can see a double bottom here in May and June. And if you extend this over, there is a shelf that was put in about a week and a half to 2 weeks ago, and it spent several days at this level. So I think this level is pretty strong, and I think we're going to retest there, by the way. Right now we're putting in, if you see this as a cup and handle, which is typically a bullish continuation pattern, and I don't think we're going to break through the underside of the 200 simple moving average, which is this red line right here. So it's beginning to consolidate into a flag. The volume is diminishing here, so there seems to be less interest in pushing this up. So I'm thinking that it may, in fact, it might come up to the 200, but it's probably not going to go much further than that. If, in fact, it does find a way to get above the 200, the furthest it's going to go, in my estimation, is about 1130, which is this swing high here that coincides with a swing high back in June. We do have a head and shoulders, left shoulder, head, right shoulder, and this is the neckline that extends from the first trough to the second trough. And if you extend that through here, it ends up being about 1077. So that could be some resistance on the, or rather support on the way back down. There's also this swing low at 1060 that we need to recognize, which in fact is the first trough in the head and shoulders. And then the aforementioned 1040 to 1044. If it finds a way to break down below there, which it very well could with the fundamental headwinds that are going on right now, I think a very critical level is 1010 to 1011. If it breaks down below there, we could go to about 850 to 900. So it could be a bloodbath if it goes down below there, which, you know, there are some people that are talking about that. But I really focus on the critical support and resistance levels and just follow the market. So if it does break below these levels, then I'll make the proper adjustments at that point. You can see here that the stochastics is in the overbought area. I would look for it to come back down, and there it looks to be, as I mentioned in the Dow, the beginnings of possibly a bearish divergence. If this begins to round over here, we'll have a higher peak to a lower peak, which is going to form a bearish divergence. So in summary, I feel that it's going to have a hard time getting through the 200 moving average from the underside of it. I think it's going to bounce here off of this and come back down and trade in a channel and possibly come back down. The first test is going to be 1040 to 1044. Okay, we're going to go over and we're going to take a look at the comp Q.